Good morning, Udayan. Reminiscent of 2008, is it? 6960 all in a day. From 6880 to 6960.
Morning, Lata. I hope it's 2008, and we shouldn't conclude that too hastily because the Reserve Bank is standing at the doorpost and it will try its best. I think a few $5-6 billion more in this period to throw at the rupee is not a big deal for the Reserve Bank of India, as you were just hearing. So it will try and defend 70, but 70 will be a psychological mark, if nothing else, to be breached. So it's an evolving situation for emerging markets. You know, the Turkey scare has just come in. It may blow over in a couple of days without scathing or without scarring India too much, and we might actually be fine at the end of the week. But right now, it's too early to say which shape this EM crisis is going to take. Right now, things are a bit nervous out there. But the stock market is going to be quite resilient because it has waded through many of these global kind of crises or fears quite well over the last few months. So I don't expect a massive sell-off, but I think it's a situation which one cannot be complacent about on the forex or on the equity side.
Udayan, what about the stock market itself? They've been pretty resilient. The Nifty Bank has been a very good performer. Corporate banks have done very well. With this external attack coming in, which looks like it will be ephemeral, which looks like it will be passing, what is your sense? The dips should be bought in corporate banks?
I think traders will probably be looking to buy the market right now because this is the first cut, and you've seen in the last 10 days or so since the market started to make that new high and broke out of that 11,200 kind of range. Every small dip has been bought into. So I think traders will go with that same playlist and say we shouldn't panic. If we get a 70, 80, 100 point cut on the Nifty, we should be buying the Nifty once again because this will pass and the market will bounce back and make a fresh high. Something has to happen on the chart to tell them that this time is different and we should not be buying the dip. See, the trader will only change his mind when a couple of trades go wrong, not before that. A preemptive strike on the short side or a sustained preemptive strike on a positional basis is uncalled for the trader at this point in time on the evidence of the last 10 days. That is quite easy to see. However, if circumstances change in the next couple of days and it looks like a bigger malaise, then of course the trader will change his view. The only wrinkle, Lata, I don't think you're right in pointing out that this may pass in a couple of days. The only thing is if this festers, the new turnaround FII line that we've witnessed over the last 5 or 6 years, that might start to change around. You know, the journey from 11,100 to 11,400 plus is as much an FII phenomenon as a DII phenomenon. In fact, domestic investors have started to slow down purchases over the last few days, but FIIs have come back in a big way. Now, because of this EM scare, if that goes off the table, you might have a little bit of a technical issue for the market and that support might not be there. So we need to be a bit cognizant of that.
Then, what about the corporate lenders? I mean, the narrative has shifted from bad loans to growth fairly quickly. Would that make you a bit circumspect?
Nothing would make me terribly circumspect, Sonia, except the fact that many of these stocks are up 20% from their recent lows already. Now, if something goes wrong at such a juncture globally, you will find that this is the space which a lot of people would rush in to take profits. We are not there this morning. It's not like ICICI Bank starts to tank this morning. But you've had a bad headline number for SBI. The core numbers did not look very encouraging. There are non-watch list slippages that you guys were talking about. So it's not a great set of numbers. Now the global environment is a little murky. So you could see profit taking happening because of the sharpness of the rally in many of these corporate facing banks. But it might be temporary profit taking unless you have just entered a situation where the global market is more important now.
Yes. Then do you see the IT stocks resume their market leadership given the way the rupee has been moving?
Well, it will be the outperforming class right now. There's no question about that because of the currency. And also there is a mild suspicion that this might become a bigger global problem. So as long as that fear lingers, you will see the obvious parts getting a little bit of money, which is IT, which is pharmaceuticals, which may be even the retail private banks, the stronger ones that is, and maybe some of the consumer stocks. I think the rest of the pack, the market will probably wait it out a little bit to see if the dust clears, if the dust settles a little bit. And once the air resume in some of the other pockets. But till that happens, and the rupee is still flirting dangerously with 70, I think IT, pharma, retail, private banks, and consumers might be the hiding spaces.
Okay, by the way, then I just wanted your thoughts on this metal cycle. If you have looked at it, of course, this fresh trade warfare that apart, but your thoughts on the likes of Tata Steel and other stocks at current levels.
I don't know about trading view, Anuj, because these stocks have come off quite a bit in the last couple of days, so they could bounce. I'm not an expert on that, but I would be cautious about the metal space, and I'll tell you why. Because one thing which is usually very telltale in the market is how stocks react after their results. And after the results of the declared headline numbers of many of the corporate banks, these stocks have actually jumped, and they were not great results on the face of it. The stocks actually jumped quite a bit. The opposite happened in metals. The results were pretty okay for Hindalco, for JSPL, even for SAIL. But stocks have not gone anywhere after the numbers. In fact, any pullback after those numbers were actually sold into. That often betrays what the market mood about a particular sector is. That the market's waiting for good news to actually give those stocks rather than tank up on them. So these stocks have underperformed over the last few months. But I think the mood and the momentum is probably against them, given fears which are now circling around the general global space.
Well, we got carried away by the way the markets were moving, and we didn't ask you that important development that would have excited you. Suptankar resigning.
Yeah.
It'll only be exciting news, Lata, if he joins Axis or ICICI Bank.
No, he's not joining
HDFC Bank point of view, I don't think it is exciting. Who knows? ICICI Bank. I don't know, man. If you're saying that it's joining neither Axis or ICICI Bank, then I don't think it is big news. HDFC Bank is not much that we ascribe so great powers to one individual. Is not an institution like that cannot be a one-man outfit. It has a very strong board. A suitable candidate, maybe even a better candidate, will come to the fore to take on at the helm of the bank. I think if anybody is selling HDFC Bank today because of that news, I think it's making a gross mistake. If anybody is buying ICICI Bank because Paresh might take over, that I don't know about. That must be more material.
No, I don't know about ICICI. It's a very fluid situation over there because there is the Sri Krishna committee investigating, and there is up until June for even Chandakuta's term to get over, whether or not she is in the seat. So no, I'm not talking about ICICI. Axis, he's definitely not joining. That is confirmed news from sources whom I cannot doubt. So anyway, we'll wait and see. There is a very strong buzz as well that he isn't joining anywhere, any of the banking companies that we are thinking about. But we'll wait and see. For HDFC Bank itself, yes, I agree with you. Hardly an institution that can be moved by the DMD resigning. Thank you very much, Udayan, for joining us.